Our last topic is on the financing activities section and then finalizing the statement of cash flows. Financing activities are all the transactions that pertain to financing within our company. It's the topics from Chapter 13 and 14 where we issued stock and issued bonds. Some specific examples include cash inflows from issuing debt, such as notes payable and bonds payable, from issuing common and preferred stock, reissuing treasury stock, and from contributions by owners. Other examples include cash outflows to pay dividends to shareholders, purchase treasury stock, pay withdrawals by owners, and pay debt off. Just like the investing section, in the financing section, cash increases are added and cash decreases are subtracted. Ask yourself, what is happening to my cash? You will use information from the balance sheet, specifically from the long-term liabilities section and the equity section. You should also look at the additional information section to make sure none of these transactions are non-cash, which would then go in a separate schedule. We are continuing with the same problem as the prior two videos, but now we will complete the financing section. There will only be one item in this specific example, but usually there are more. Let's go to the balance sheet so we can look at the long-term liability and equity section. As we look at the balance sheet, there are no long-term liabilities. There are current liabilities, but none are long-term. Let's move on to the equity section. On a side note, you do not need to look at retained earnings or any of the total lines. These are things you can look at in more advanced statement of cash flow examples, but not in this course. The only thing in the equity section besides the retained earnings is common stock. Common stock has increased by 10,000 from last year to this year. What would cause an increase in the stock? It would be if we issued more stock. Let's take a look at the additional information to see if we issued stock for cash and if we paid out any dividends on this stock. Number 2 in additional information states that stock was issued for cash. Number 1 states that no dividends were paid. If dividends were paid, then that amount would be subtracted from the financing section because this would be a cash outflow. Cash would be decreasing if we had to pay dividends. But at least this tells us that stock was issued for cash and not in exchange for something that was non-cash. Therefore, it would go on the statement of cash flows. The only item that would go in this section is cash received from stock issuance. The amount is $10,000. Would this be positive or negative? What is happening with our cash when we issue stock? We issue stock and then we receive cash. So cash would be an inflow, it would be increasing. We add the left-hand side column and put the total on the right-hand side. There is only one item, so it's pretty easy. It would just be the $10,000. The last step in preparing the statement is to report the beginning and ending cash balances and provide that the net change in cash is explained by the operating, investing, and financing cash flows. This part is pretty simple and also lets us know if we prepared the statement correctly. We total the three sections together, which were the amounts we inputted on the right side column. That would be our change in cash. When we look at the balance sheet, the change in cash from last year to this year should be this exact same number. If it is, then the statement of cash flows is most likely prepared correctly. However, if it is not the same amount, then there is a mistake somewhere. The final two lines are the cash at the beginning of the year and end of the year. We also get this information from the cash line on the balance sheet. This is the final piece to our classwork problem. We just need to total the three sections, then input cash from the beginning of the year and end of the year. Let's first total the three sections. Looking at the right-hand side column, the total for investing activities would be negative $1,750. The total for the investing section would be negative $8,400. And the total from the financing section is $10,000 positive. Total these three numbers together. When all three totals are added together, you should have gotten negative $150. Now remember, there is a way to see if this is correct or not. Let's go back to the balance sheet. We're going to be looking at the cash line. As you can see here, the change in cash from last year to this year is negative $150, which is what we got when we totaled the three sections. This means we are either on the right track or we are correct. We also need to input the cash from the beginning of the year, which would be the $30,550, because cash at the beginning of the year is the same as cash at the end of last year. We also need cash for the end of this year, which would be the $30,400. We need to input these amounts in the statement of cash flows. Let's input these last two amounts. Cash balance at beginning of year would be $30,550. Cash balance at end of year would be $30,400. I would say the one good thing about this statement is that you do know what the end result should be before even starting to prepare the statement. However, there are a lot of things that can go into here. You're going to have to be able to analyze an entire balance sheet in order to see what goes where. So doing these statement of cash flows does take a lot of practice. I recommend trying to do as many of these as possible to get the hang of it.